Welcome to Cryptrex. Today, we're going to spend a full session understanding how to make money from crypto. The world of cryptocurrency is exciting, fast-moving, and filled with opportunities. People all over the world are making money through different methods. Some are traders, some are investors, some are developers, and some are simply early adopters who discovered unique opportunities. To truly understand how money is made in crypto, you need to look beyond the price charts and explore the many different ways this ecosystem creates value. In this session, I will take you step by step through every important method from trading to investing, from DeFi to NFTs, from freelancing to long-term holding. By the end, you will have a complete roadmap that you can use in your own journey. The first and most common method of making money from crypto is trading. Trading means buying low and selling high. But in practice, it's far more complex. Successful traders understand technical analysis, fundamental analysis, risk management, and market psychology. They study patterns on the charts, such as support, resistance, and trends. They also follow news that can affect the price, like government regulations, big partnerships, or global economic events. In spot trading, you buy actual coins and hold them until you see a profit, then sell them. In futures trading, you are not buying the coin itself. You are buying contracts that allow you to profit when the market goes up or even when the market goes down. Futures can be powerful because you can use leverage, which multiplies your profit. But leverage can also multiply your losses, which is why many beginners lose money quickly. Let us take an example. Imagine you buy Ethereum at $2,000 and sell it at $2,500. That is spot trading, simple and clear. You owned the asset and sold it for more. In futures trading, you could open a long position at the same level with leverage, and if the price went up to $2,500, you might double or triple your return because leverage multiplies your exposure. But if the market had gone the opposite way, you could lose your capital very fast. This is why discipline is critical in trading. Professional traders do not enter the market without a plan. They decide in advance how much they are willing to risk on a single trade and where they will exit, whether in profit or loss. They never risk their entire account on one decision. They use tools like stop losses to protect themselves, and they follow strategies like trend following, range trading, or scalping. Some traders prefer to trade only in certain sessions, such as the London or New York session, because those times have the most volume and volatility. The life of a trader is intense, but rewarding for those who stay disciplined and consistent. Trading also requires emotional control. Fear and greed are the two biggest enemies of a trader. When prices drop, fear pushes people to sell at the bottom. When prices rise, greed makes people chase the market and buy too high. A professional trader learns to control these emotions and stick to the plan. They treat trading like a business, not like a lottery ticket. Over time, this mindset is what separates consistent winners from those who lose money. Another layer to trading is understanding the difference between short-term and long-term perspectives. Day traders and scalpers look for small moves in the market. They may make many trades in a single day. Swing traders hold positions for days or weeks, waiting for bigger moves. Position traders or investors may hold for months or even years, depending on the trend. Each style has its own advantages and challenges. Day trading requires speed, focus, and quick decision-making. Swing trading requires patience and strong analysis. Position trading requires belief in the fundamentals of the project and the ability to handle long-term volatility. In the world of crypto trading, technical indicators also play an important role. Traders use moving averages, the relative strength index, the MACD, and Fibonacci retracements to identify potential entry and exit points. These tools do not guarantee profit, but they provide structure and help traders make informed decisions. Combining indicators with strong risk management often creates the foundation for long-term success. Another way traders earn money is through arbitrage. Arbitrage means taking advantage of price differences across exchanges. For example, if Bitcoin is priced at 40,000 on one exchange and 40,200 on another, a trader can buy from the cheaper exchange and sell on the more expensive one, instantly locking in profit. While opportunities like this are small, they can add up when done at scale. Some professional firms use bots to execute arbitrage strategies thousands of times a day. Trading is not for everyone, but it is one of the fastest ways. People try to make money in crypto. The key lesson is that trading requires skill, education, and experience. It's not something you can master overnight, but with dedication and practice, it can become a powerful income source. Now let us move to investing, which is another important way of making money from crypto. Investing is different from trading because it focuses on the long term. An investor buys coins or tokens not because they want to sell them tomorrow, but because they believe in the long-term growth of the project. This approach is also called holding or hodling. The idea is simple. You buy Bitcoin, Ethereum, or any other coin that you believe will be worth much more in the future, and you keep it in your wallet regardless of short-term volatility. Investors make money because the crypto market has historically rewarded patience. Bitcoin, for example, was worth just a few cents in 2009, but today it is worth tens of thousands of dollars. Those who held through the ups and downs became millionaires. This does not mean every coin will perform like Bitcoin, but it shows the power of long-term conviction. Choosing the right projects is the most important part of investing. A smart investor studies the fundamentals of a project. What problem is it solving? Who are the founders and the team? Is there real adoption? Is the technology secure and innovative? For example, Ethereum introduced smart contracts, which created an entire ecosystem of decentralized applications. This strong use case is why Ethereum became the second largest cryptocurrency. Projects with weak fundamentals often disappear, while strong ones grow over years. Long-term investors also need to understand risk diversification. Putting all your money into one coin is risky. Instead, you spread your investment across multiple strong projects. Some people prefer to have a large share of Bitcoin and Ethereum, with smaller portions in newer projects. Diversification helps protect you, in case one coin underperforms. Another way to make money as an investor is through staking. Staking means locking your coins into a blockchain network that uses proof of stake. You do this to help secure the network, and in return, you earn rewards, like interest. It's similar to putting money in a bank account and earning interest, but in crypto, the returns are often higher. For example, staking Ethereum after its move to proof of stake allows investors to earn passive income. This strategy is popular with those who want to hold long-term, but also generate rewards along the way. Mining is another method, although it's less popular for beginners. Mining means using your computer hardware to solve complex mathematical problems that keep the blockchain secure. In return, miners receive new coins as a reward. Bitcoin mining started with regular computers, but today it requires specialized hardware and a lot of electricity, which makes it difficult for small investors. However, in some regions with cheap electricity, mining can still be profitable. For many people, though, mining is not the easiest entry point anymore because competition is very high. Yield farming and liquidity providing are newer methods connected to decentralized finance, also called DeFi. Yield farming means lending your coins into liquidity pools and earning rewards in return. Liquidity providers supply tokens to decentralized exchanges and receive fees from traders who use the platform. While the returns can be high, they also come with risks like impermanent loss or smart contract vulnerabilities. This space is exciting, but requires careful research before investing. Another important part of investing is dollar cost averaging. This strategy means you invest a fixed amount regularly, regardless of the price. For example, you buy $100 of Bitcoin every month, no matter if the price is high or low. Over time, this averages out your cost and protects you from trying to time the market. Dollar cost averaging is simple but powerful. Many long-term investors prefer this method because it removes emotional decision-making and builds discipline. PS, end PS. So the psychology of investing is also worth understanding. Successful investors do not panic when the market dips. They see dips as opportunities to buy more. They do not chase pumps when prices are at all-time highs. They stay calm and stick to their plan. They also set realistic goals. For example, an investor may decide they will sell part of their holdings when the price doubles to secure profit, while keeping the rest for even bigger gains. This strategy ensures that no matter what happens, they benefit from growth without being fully exposed to risk. PP. Overall, investing is less stressful than trading because you're not glued to the screen every day. However, it still requires research, patience, and conviction. The reward for long-term investors has historically been very high, and many people prefer this method over active trading. Pop and part. Thank you for staying with me till the end of this session. I hope you now have a clear understanding of how people make money from crypto, whether through trading, investing, or newer opportunities like DeFi, NFTs, and staking. If you found this valuable, make sure to subscribe to Cryptrex for more detailed guides, insights, and strategies into the world of cryptocurrency. Your support keeps this journey alive, and together we will continue to explore the future of digital finance. This is Cryptrex signing off, and I will see you in the next video.